Yo, wagwan, my people. It's actually about time that I make a little video breaking down how I'm able to trade small accounts and how I figured out how to kind of trade them, not full margin, like properly using risk management and being able to flip small amounts into like sizable amounts that you can buy prop firms with or even scale into larger accounts. And yeah, today I traded gold, and as you can see, like I'm able to make quite decent returns from like, let's wait for the camera to clear up, quite decent returns from like small deposits. So I deposited this week, actually last week I deposited £9 yesterday, and I'm at £94 profit. You would decide what you want to do with that type of profit. You could either scale it further or buy prop firms with it, which I'm thinking of doing again. But yeah, let me just make a small breakdown specifically for that purpose. I decided to make a quick video for the guys because I haven't uploaded anything for a while, and decided to give some like quick game here. So let me actually put yo, my screen is wilding. Yeah, so what I usually do, this kind of only, it doesn't only work with trading gold, but the volatility that gold offers in general is very like, it's a big plus. Gold is like ultra volatile. So getting in quick scalps with that is just, it's easy. It's like much easier than trading currency pairs if you're going to try to grow an account like quickly and like use the money for other purposes. So let me turn my screen around. Let me turn my camera around. I'm not going to do a screen sharing type of thing right now. That's going to take too long. I just want to make basically a quick breakdown explaining like my execution and how I am actually able to get in and out of the markets with correct signals and everything, right? So as we know, look at the price action that the market structure of gold. Like gold has a lot of price action, man. Like it gives you proper structure, it generates liquidity. It will literally show you that, okay, this liquidity has been unmitigated. It will come to it, leave it, and then come back to it. Like basically that's what the gold pair does, okay? Now, benefiting from that and like making the most of that, what you want to do is trade it in such a way that you're only intending to scalp short-term market structure, okay? You're not trying to swing gold. You're trying to like get in and out. As you can see with these positions, yes, it will result in like frequent trading, a lot of positions in like one day, but like only taking good setups though. Because as you can see, like here you see I'm buying, I'm selling, I'm buying, I'm selling, but most of them are quite profitable. Almost all of them are profitable, and they are quite quick scalps. They're not long positions. They're not big numbers of profits. They're like in and out, in and out, in and out. Now, the reason why I do this is because if you're going to try to swing gold specifically, like this best works with gold because it's very it's very volatile. You can get in a position, be back at entry in the next 5 minutes, but still hit your target. So what I mean by targeting short-term market structure is that try to enter positions that only last like less than 10 minutes max. Like that's the time span for most of my positions because I'm targeting such short-term structure, and I know how gold kind of moves because if it generates a 1 minute structure, let's say double tops, I know that, okay, this has a very high likelihood of sweeping that double top and then shooting back down. Like it generates liquidity on the 1 minute time frame. Like liquidity will be generated and it will be swept. So these are the key things that I keep in mind. Liquidity that's generated, 9 times out of 10, it is swept. After the sweep, it always reverses. After a large impulse, it always retraces back to where it was. That's what always happens. So if you're going to put in a gold trade, don't try to enter it and then try to see the next bull run of like a year run. No, 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 no. Next minute structure, wait for it to sweep, because trust, after that minute structure, after it sweeps, it's coming back. It's very rare, and there's been occasions where market just dumps, but that's very rare. Like you see it tanking down continuously, not retracing. No, no, no. That happens, but it's very rare. But 9 times out of 10, it will go to your entry if you don't pull out. That's why if you're gonna trade it like this and try to grow a small account, that's why I put in small deposits, because it's like high frequency trading for sure. It has good market, it has good risk management, but I'm not in there trying to like retire from like a 10 pound account. I'm there to generate quick cash that I can use to scale into other ventures or fund my bigger account. I actually did this for a while. So what I would do is I'd have two deposits, a main account where I have like a large deposit, and then a second account where I have a much smaller deposit. So in the large account, I would have tight leverage, tight leverage, and maximum 2 trades a day. And then on the smaller account, I'm talking 1 to 2,000 leverage, and I'm moving exactly like this account. The profits from that account, I'll take it to the main account, and then that one grows, but also still trading it as well. So yeah, so what I usually do is literally just I'll look for liquidity sweep, generated liquidity, and I wait for it to sweep, and I basically just follow the market based on the immediate trend. If there's a 5 minute trend that's strong, I'll wait for a market to sweep the excuse me, to sweep the base or the top, and after that sweep, I'll enter in the direction of the trend. I'll set a tight stop loss, wait for a 1 minute structure to sweep, and then rinse and repeat. And it's not high risk trading, but it's more frequent trading. But you also have to wait for good setups because they don't come that often. And once you trade it like this, you can see that the 1 minute time frame on gold is very repetitive. You learn to spot these patterns over and over and over and over and over, because there's times where I could literally see a trade without even analyzing. I know what's gonna happen, and then I place it, and then it does exactly that. And that's happened more times for me to have a bit more conviction in my analysis to begin with. Now, I'm not saying this is gonna work for everybody, but that's just my 2 cents on how I manage to flip small amounts of cash into like big amounts. Because I've had people asking me like, "Yo, bro, I've seen you deposit this and like return this. Like, how do you make it work with such a small account?" I don't full margin, bro. Don't full margin. That's gonna cook you. Cook you. I feel like the best thing you can do with a small account is use the best risk management that you can. After a position's entered, literally when it's like a couple of points up, put that stop to entry. Put that stop to entry, bro. But yeah, that's basically my 2 cents on trading gold with small accounts. And yeah, I hope this video helps somebody. And if you liked it, like and subscribe. Deuces.